And welcome to Zero Risk Forex. This channel is aimed specifically at people who already have been trading, who have traded real accounts, they've lost money. If this is you, this channel, this video is for you because I want to show you a strategy that I've been using that has been giving me slow but very consistent returns. Once again, you're welcome to Zero Risk Forex, aimed at people who already understand trading. Because if you don't understand trading, there's no point watching this. You better go and learn the basics of trading. Okay? Why is this called Zero Risk Forex? And why should you be using this strategy to trade? Let me explain. Every chart has a price. So with this strategy, the most important thing is this panel right here. Right? Not these candles, not support, not resistance. The most important thing is this price panel on your right. So this is the USD JPY over here that I'm looking at. You see the price panel goes up to 149.08. If I swap that over to the NAS 100 or the NASDAQ, you see that the price goes from 0 up to 20,262, which is the current price. So the reason I call this Zero Risk Forex is because anytime I'm trading, my risk management strategy is based on calculating the distance between any current price and 0. Right? So if I was to take this trade right now, I'll be buying because it's obviously going on an upward trend, and I will determine my lot sizes by dividing my account size by that figure there. That means whatever figure I get is how much I'm trading per point. So the only way I can lose my money is if this price suddenly drops down all the way to 0, which is virtually not going to happen in my lifetime because the NAS 100 is the top 100 companies in the world. It's a basket of them, and every single company in that basket would have to go bust for this price to go 0. You have the likes of Microsoft, Google, Amazon, Facebook, Nvidia, Zoom. All those guys are in that bucket list, right? So I know I can sleep well at night. If I'm trading the USD JPY, the same thing. Between that price and 0 is a 149.08. That's what I would be trading. Now, if you look at the France, for example, this is the France 40. It's only at 7,000. So basically, the nearer the price is to 0, the stronger trading lot sizes you can trade. When I say lot sizes, I don't need to get confused. I'm talking about with always calculating how much you're trading per point or per pip, right? That's different from lot sizes. You want to figure out how much each pip is, right? So because this one is at a lower price, 7,000, obviously you can trade higher points. So this is why I trade this way, because I don't want to be traded using stop losses. So the narrative out there is this. You risk 2.5% of your account size. You use that to calculate your stop loss. And if you get knocked out of the trade, which you do 95% of the time, You've just lost 2.5% of your account. I don't want you to lose 2.5%. I don't want to be losing 2.5%. I want to trade in a way that every trade I trade, the market could go down, but I know it's not going to hit zero. And I just know it's just a waiting game. Sooner or later, the price is going to go up because it's on an upward trend. That's the first rule. Second rule, try and trade things that give you positive rollover or positive swap so that while you're waiting, because there are many forces that go against you, right? You have the stop loss hunting, where the price is just knocking people's knocking out your stop losses and keeping your money. You have the spreads that you have to beat, and you have like overnight rollover. They just hold the market down and they just charge you rollover overnight. So you want to try and trade markets that give you positive rollover. You want to do a proper risk management strategy because that's why I only do long trades. Zero risk forex is about doing long trades because when you do a long trade, you're buying whatever price you're buying. You can see your floor price, which is always zero. You can use zero to calculate your lot sizes. Now, yeah. So when you're selling, you don't have any ceiling price, okay? Because if I'm selling right now, how do I calculate how much I should be trading per pip? There's no ceiling price. There's no zero that I can use to calculate my lot size or my price per pip. So for me, that explains why you should be trading this way, why I trade this way. What should I be trading? I should be trading things that give me positive rollover, things that are not too far away from zero. So the closer the price to zero of any market, the better and easier for you to calculate the stop line. So number one, I would actually say rollover, positive rollover is the most important thing because that way when you enter a trade, number one, you know it's never going to hit zero. And number two, you know as long as that trade is in negative, you're always going to be making positive rollover. So positive rollover, very important. Then the distance between the entry price and zero. If entry price is at 50,000 and you divide your 50,000 by your account size, your account size by 50,000, obviously it's going to give you a smaller number than if you divide your account size by a price that is at 7,000 or a price that is at 10,000, right? And now, how should you trade? When should you trade, right? This goes back to our lovely indicator that I showed you in the last video, which is the R Williams. This R Williams percentage indicator is one of the best indicators. So what do? You look for a market like that. You've got this R Williams indicator. As I explained in the last video, it's always got two lines. It's got these squiggly lines that go up and down, right? Right. When the line goes down, right? If the line goes down here, on the way up, it touches this red line right here. Soon as it touches this line, you are looking up onto your normal 6-hour chart, and you're taking a buy trade right there, and you make profit, right? Later on, you're aiming for your 2.5%, or basically you're trying to make 2.5% each time. It goes down there, it goes up, it hits that point, you look up, it's a green candle, you take that trade. Okay? It goes down right here, it goes up, it hits that red line, you look up, you take that trade. It goes down right here, it goes back up, it hits that red line over there, you look up, it's a green candle, you can take that trade. This is where we are last time. It went down, it goes up, you take the trade, and that's the France 40 over here. Now you can check that for anything. Let's check that with gold. So this is gold. Let's see what happens. Gold is saying. So we just had this is a signal right here last week that I took. It came down, it went up, and entry price is gone up there. This is somewhere else it happened. From the top, it's gone up here, down, down, up, down, up, down. It's gone down. It's touched here, and there's a little trade there. It came down here. It went up here. It touched right there. You took that trade there. That's gold. So you can test this. The name of this indicator is the R Williams percentage. Okay, you can get that indicator with any broker. So my broker is FXCM. I've been using them for years. I've tried using MetaTrader 4, MetaTrader 5. I find that when I use those platforms, there's a lot of I don't know what to call it. There was one time I was trading on a MetaTrader. I was trading the NAS. I had two positions of the same thing, NAS positions, and one is quoting one price, the other one's quoting a different price. Hey, I don't know how that happens. How can two same things be trading quoting a different price? So I'm a bit skeptical. I stick to what I know. So this is what I use, the FXA platform. I aim for 2.5% each time. And which brings me back to the update on our thing. So this is a 250. Started Monday, the 30th of September. My target was to make 250, 2.5% every week. This was in the last video where we were. We got it up to 256. Today, we had the brilliant week last week. It stands at 315. So between last week's video and this week, that's gone from 256 up to that, which puts us about 315, puts us about here. Let me take away that 50 from there. So we'll take that 50 away from there. That puts us about 250, 2.5. Let's take that one off as well. Yep, so that puts us about there. So I've done all those challenges, so I can mark all those green for now. Just in case you're wondering what this is, you're new, you can go to video number 1. It explains I'm doing a challenge where I'm going to try and compound this live account that I'm using on this video by 2.5% every week. Last week was obviously a very good week. If you look at the statement, this is the account statement. That's the account number 251016747. Right, and that's the account number there, 251016747. That's the current balance. If you go over here, it shows you the start date was 30th of September over there, which is the start date over here, 30th of September. We've done all those challenges. And if you look at the account balance right now, it shows you beginning balance 150, 100, and where's the that's it, profit and loss, £79.79. They've charged me, look at rollover, right? They've charged me minus 780 is just the rollover alone. So that's why I'm saying you have to be very careful with the rollover charges. That's how much profit. So that's today's video. This is where our account is at the moment. So hopefully I'm going to trade this week, and I'm going to make further progress. And our aim is to get this account to about 25 grand using the same risk management strategy and the same indicators to pick when to enter trades. And you can watch all this live on this YouTube channel, Zero Risk Forex, by hitting that subscribe button. Okay, I think I am going to leave it right there for now for this week, and next week I'm going to start trading this week, tomorrow Monday right through to Friday, and hopefully make another video that summarizes what happened all this coming week. All right, so thanks for watching. Like I said, subscribe, like this video, and keep following me on this channel. Thanks for watching. Bye.